Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the silver market still holds to its bullish stance, and as you can see here, the market has now tackled that 1725 resistance, and as it buckles, exposes the upside to 1745 with an objective now seen at 1760. I am cautious though to this call. The reason behind that is that technically the stochastic is rolling over, and also the histogram on the MACD is now showing some potential that the market is not too near away from a top. Therefore, we could see a rejection from the 45 to 60 level on $17 and could eventually see the market turn down and look to that target of 1680. So in the short term, yes, I do expect to see a little bit more bullish momentum, but we're not too far away from the top. The gold price action reaches its topside target, and as you can see here, the market has clearly clipped a high around on the gold of 68, just underneath that 1,270.72 resistance. In light of the current pattern, we are, like silver, coming to the top side of the range and could see a potential pullback initially to a target of 64, with a base now seen around 1258. Now, a break beneath 58 will give further exposure and bring in a target of 44 to 46. Now, that being said, it is likely there are stops above this level of 72, so we could see an impulse up towards 79 to 85 and then maybe see the market turn down. So not quite confirmed to the top side as such as seeing a rally, but a break may eventually see that move. Well, the Australian dollar last week has dropped away from its 3-week highs and now moves closer towards the support of 73.80.95. I do expect to see further weakness into this week, and with the key events to the economic outlook, we have private capital expenditure and retail sales this week. And if we do see the slightly weaker numbers, then we could see the Australian dollar tumble towards this level of 73.80.95. Now, beneath there gives further exposure to 73.15.25 and reassess from there. Any advances, I still look to sell into rallies or into strength, with the resistance coming in at 74.75 and firmer above, still around that supply zone at 75.15.25. Well, with the dollar index recapturing momentum as the market advances from 96.94 on the index and posts a 97.45 high, you can see that the euro is now coming under pressure and now looking away from that 112 handle and looking towards immediate target of 111.60, which is now just slightly coming under pressure this morning. I do expect to see further weakness to bring in a target of 110.70.90, and a break beneath there would give further exposure to the downside to a target of around 108.45 to 65. Now, do note as well, look at the technicals we are breaking down here and keeping a close watch to this. If the pattern does continue on, then we should see this market take out the support of 110.70.90. Also this week we have the ECB, Mario Draghi, to speak at the Economy and Monetary Developments before the Economic and Monetary Affairs Committee in Brussels. Now, he previously dismissed concerns that the loose monetary policy may be fueling bubbles that threaten financial stability. Despite the ECB warning, bond markets could be exposed to some turbulence. So people will most probably keep a very close watch to what Mario Draghi has to say this week. Surprisingly, dollar yen came under pressure on Friday to the downside and did at one stage pose a threat as it challenges that support level of 110.80.90 with an 86 low on Friday. Now responding to a slightly bullish stance to the start of this week and also from the close of New York, does bring an immediate target towards the resistance that comes in at 111.65. Now, we need to see further momentum from the US dollar to support a further rally. Otherwise, the market will turn back to the downside and look towards this 110.80 level, or even lower towards 110.0515. But technically, the market is slightly poised to the downside due to the fact that there is little momentum in terms of a bullish support for the next 24 to 48 hours. But also to note as well that we do have the US out, and also the UK from Remembrance Day, and also we have the bank holiday in the UK. So wrapping up with sterling, you can see here that the market got crushed on Friday and failed to find the support at 128.30.45 and did end up recording a low of 127.73. In response to Friday's release of the opinion polls in the UK, it was revealed a huge drop in the lead the ruling Conservative Party has over the Labour in the run-up to the UK general election. The poll by YouGov puts the Conservatives just 5 percentage points ahead of the opposition leader party, and down from 20% lead in two polls published only 11 days ago. From Newswire's, 37% of voters have a lower opinion of Prime Minister Theresa May than at the start of the month, and also 39% have more positive views on Labour leader, says the Observer opinion research. So if this starts to increase this pattern, then my target, firstly on a technical point, has been taken out 128.30, so this exposes the downside of 128.30.60. And also, if the news does concern with the election from the polls figures, then we could see further weakness and possibly back towards this level here when Theresa May actually called for the election, when the market rallied 400 points. Technically, I am supportive of the downside move. So any rallies should find resistance for sterling around 128.40.60 and higher, firmer around 129.20.30, when the immediate downside coming in at 127.55 and lower eventually towards 127.10.15. And as I mentioned, further risk is towards the downside. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day ahead.